Hello and a very warm welcome to Front Page on the AIM Network, India's definitive media organization and voice on everything AI and technology. Hope all of you are doing wonderfully well. Well, on the front page menu, we have Google, we have AMD, we have Google DeepMind, and of course, we have the India AI mission. And to spice things up, here are the headlines. Google crushes Q4 earnings, pledging a staggering $185 billion for 2026 infrastructure. With AI agents now writing half its code, the giant shifts focus from model wars to a high-stakes power race. Google DeepMind unveils reinforced attention learning (RAL) and Model Hope to solve AI's catastrophic forgetting. This breakthrough enables continuous nested learning, allowing systems to retain long-term memory just like the human brain. India accelerates its AI infrastructure push by tendering 25,000 additional GPUs, targeting a massive 65,000 unit national cluster with subsidized pricing under $1 per hour. The mission aims to democratize access despite global supply constraints. As HBM production for AI giants cannibalizes standard RAM capacity in a 3-to-1 trade-off, soaring costs threaten to derail Qualcomm's on-device AI push and downgrade next-gen smartphone specs. Welcome to Front Page. Let's imagine opening your inbox and staring at a $185 billion electricity bill. Most of us would assume it's a glitch, but for Sundar Pichai, that's just the cost of doing business in 2026. To put that in context, they're basically spending the equivalent of buying 5 to 6 Air Indias, yes, the entire airline, every single month for a year. But here's the twist. Google isn't losing sleep over OpenAI or looking for Microsoft under the bed. They aren't even scared of AI killing search. Google is scared of power. So today on Front Page, why the real bottleneck for the future is a plug point. Why 50% of Google's code is now written by ghost agents. And why AI isn't killing search, it's actually making the storekeeper bigger than ever. Alphabet closed Q4 with blockbuster numbers. Q4 revenue, $113.8 billion, up 17% in constant currency. Operating income, $35.9 billion, up 16%. Net income, $34.5 billion, up 30%. EPS, $2.82, up 31%. Operating cash flow, $52.4 billion, company record, by the way. Free cash flow, $24.6 billion in Q4. The full year 2025 revenue is $403 billion, which is the first time crossing $400 billion. The cash, $120.8 billion on the balance sheet, and yet Google basically said, we still don't have enough compute. Sundar Pichai's underlying message, demand is insane, but capacity is finite. He straight up basically admitted they've been supply constrained even while ramping up. And he's worried about staying supply constrained through 2026 because the constraints aren't software, they're actually physical. If I were to paraphrase what Sundar said, this is what it would be. How do you ramp up to meet extraordinary demand, power, land, supply chain constraints? Well, and of course CFO Anat Ashkenazi backed it with this. Massive infrastructure investment will pressure the profit and loss through higher depreciation and data center operating costs like energy. Depreciation already jumped 38% to $21.1 billion in 2025 from $15.3 billion in 2024. And of course, in 2026, depreciation growth will accelerate even more. But here's where it actually starts to get interesting. The 2025 capex, $91.4 billion. 2026 capex guide, $175 billion to, yes, $185 billion, which basically means it is doubling. So how should we break this down? Well, 60% of capex goes into servers, 40% in, and of course for all of the junior developers who are watching in Pune, Bengaluru, or for that matter wherever else you are, I would suggest please take a seat, because what I'm about to tell you might be just a little unnerving. Google CFO said about 50% of our code is written by agents, then reviewed by our engineers, end quote. This is the CFO telling Wall Street. AI is now a production engine inside Google. So what does that actually mean? Engineering shifts from typing to reviewing. So if agents are writing half the code, engineers become reviewers. Yes, you've guessed it right. System designers, test plus quality gatekeepers, integrators, reliability owners. Speed basically goes up, headcount pressure follows. Because let's just think about it. If your team is shipping twice as much code using agents, you don't need a linear hiring spree to scale. Google is explicitly using this internal AI boost to bankroll that $185 billion bet. They're basically rebuilding their own productivity to finance the hardware. And it's not just for developers. They're pushing agents into finance and treasury as seriously as they are into search. This is, of course, AI industrialization, or for that matter, what Jensen Huang calls AI factories. AI isn't just a product Google sells, it's actually the engine which is running the company. And now, if you're all set, this is going to go a little quickly. So if you're ready, here we go. Q4 revenue, $113.8 billion, plus 17%. Operating income, $35.9 billion, plus 16%. Net income, $34.5 billion, plus 30%. EPS, $2.82, plus 31%. Operating cash flow, $52.4 billion, record by the way. Free cash flow, $24.6 billion. Q4 2024-2025 revenue, $403 billion. First time, greater than $400 billion. Capex, 2025, $91.4 billion. Capex 2026, $175 to $185 billion. The cloud revenue, $17.7 billion, plus 48%. Cloud operating margin, 30.1% from 17.5%. Cloud backlog, $240 billion, plus 55% quarter on quarter, which is greater than 2 times year on year. Gemini Enterprise, 8 million paid seats, launched 4 months ago. Gemini app, 750 million MAUs or monthly active users. API usage, 10 billion tokens per minute, up from 7 billion last quarter. YouTube annual revenue, $60 billion plus. Shorts, 200 billion daily views. Waymo, 20 million autonomous trips, 400,000 weekly rides. Wow. I need a short breather right now, so well, let us do something which always is a breath of fresh air. Yes, you've guessed it, the front page take. So Google's message is, AI is not killing Google. AI is making Google more essential. But the next frontier is beyond smart models. It has now actually veered into electricity, data centers, and AI factories. So if you agree or disagree, I would definitely like for you to tell us in the comments below. This, ladies and gentlemen, is Front Page by the AIM Network. Like, share, subscribe, and always remember, think AI, think AIM. Welcome to Front Page. Have you ever felt like your AI is gaslighting you? You spend all morning training it on your project. You go for a quick chai break, and when you come back, it's like you're a complete stranger. Today on Front Page, why your AI is ghosting your previous conversations, and the high-stakes race to fix the amnesia at the heart of artificial intelligence. Well, we've all, of course, experienced this. You ask ChatGPT or Gemini a question at 10 a.m. It's brilliant. It answers very sharply. You ask the same thing at 6 p.m., it gives you a very blank stare. It's not a glitch. It's a memory crisis. Humans have a life story. AI only has a context window, a temporary workspace that gets cleared like a slate after every session. This memory gap is the biggest hurdle between having a useful tool and having a true digital partner. I'm of course sure I don't need to refresh your memory to like, share, subscribe. Today's large language models don't actually learn from experience. They don't accumulate knowledge across time. They don't continuously improve. And when you, of course, update them, they very often override what they already know. This failure mode has a name, and it is called catastrophic forgetting. Teach the model something new and it forgets something old. Upgrade the system and you risk erasing past capabilities. Humans don't work this way. Well, most of us. You don't forget how to ride a bicycle because you learned to drive, yeah? Your brain runs multiple memory systems operating at different speeds all at once. AI doesn't until now. Today, Google DeepMind released a research paper that could actually change this trajectory entirely. Just a paper introducing a new idea called reinforced attention learning, or RAL. And underneath it is something even more important, which is a new learning paradigm called nested learning. So traditionally, AI models are trained to optimize outputs, predict the next word, predict the next token, predict the next action. Google's new approach shifts the focus inward. With reinforced attention learning, the model is no longer rewarded mainly for what it says, but for what it pays attention to internally. Attention itself becomes trainable. So in simple terms, the model is taught not just to answer correctly, but to consistently focus on the right information, even as new data arrives. This is subtle, and it's profound. Under the hood, this introduces nested learning. So instead of treating a model's, architecture and its training algorithm as separate stages, nested learning treats them as a system of interconnected optimization loops. Some components update fast, handling short-term context. Others update slowly, preserving long-term knowledge. Google calls this a continuum memory system. It mirrors how the human brain simultaneously manages short-term memory, long-term memory, and lifelong learning without forgetting who you are every time you learn something new. To showcase that this is beyond just theory, the researchers built a proof of concept model called HOPE, very aptly. And the results are striking. HOPE outperforms modern recurrent models on language modeling. It handles long context memory better than state-of-the-art systems. It avoids catastrophic forgetting by updating different components at different speeds. And of course, it does this without brute force scaling or massive retraining. And this is about models that can keep learning without erasing themselves. And this development obviously lands at a very critical moment. The AI industry is obsessed right now with scale, compute, monetization, ads versus subscriptions. Google DeepMind is very quietly working on something more fundamental. How to make AI systems that learn continuously, improve from experience, and remember what they have learned already. If this approach holds, we believe it moves AI away from being a static snapshot of training data and closer to being a living, learning system. And of course, for now, as always, here is the front page take. So the next time your AI gives you a very brilliant answer at breakfast, but starts acting like a total stranger by dinner, don't take it personally. It's not a mood swing. It's actually just the physical wall of how AI learns today. But Google DeepMind just showed us the exit door. No massive launch, no flashy marketing, just a research paper that might finally give AI a long-term memory. And you know what, honestly? That's exactly how the biggest breakthroughs always start. And you know what? We at Front Page are very proud to always bring you those biggest breakthroughs, because this is exclusively being broken to you on Front Page. You won't find this anywhere else. And of course, before we say goodbye, I just have to say this. If you're tired of your chatbot having the memory of a goldfish, please hit like, share, and subscribe. And of course, always remember, think AI, think reinforced attention, think AIM. Welcome to Front Page. Forget everything you've heard about the global chip shortage. Yeah, let it go. While the rest of the world is busy waiting in line, India just shifted into acceleration mode. We are at the finish line of a massive GPU procurement, and the government isn't just adding chips. They're of course dropping an additional 25,000 GPUs into the national pool. This is sitting on top of the 40,535 units which are already committed. If this clears, well, India will be operating at a staggering cluster of 65,000 GPUs. And to put it into perspective, a year ago, this kind of scale was a total myth in India. We've gone from wishing for silicon to building one of the most formidable public compute engines on the planet. Today, of course, on Front Page, why India is suddenly the most economic place on earth to train a model, and how 65,000 GPUs are about to change the game for every startup from Bengaluru to Chennai to Hyderabad to Mumbai. Well, you pretty much get the picture, all over India. According to senior government officials, technical bid evaluation for the fourth tender is ongoing. At least 4 empaneled cloud providers have confirmed participation: Yotta Data Services, E2E Networks, Next Gen Data Center and Cloud Technologies, SciFuture India. One bidder has reportedly offered up to 17,000 NVIDIA B300 liquid-cooled GPUs, among the most in-demand AI accelerators globally. Others, of course, are committing Blackwell generation B200 GPUs. E2E Networks is 1,024 B200 GPUs, expected to go live this month. Next Gen is at 4,096 B200 GPUs, the deployment over the next few months. SciFuture, 1,024 GPUs, model is still undisclosed. Now we come to Yotta, 8,192 B200 GPUs already committed from the earlier rounds. So far, 40,535 GPUs have been committed across earlier rounds. Out of these, 22,787 GPUs, about 56%, have already been allocated via the India AI Compute portal. And of course, it's still counting. But here's the key friction point. Only around 15,000 GPUs are actively in use today. Not because demand is weak, but because global hardware constraints are very real. Industry players point to severe HBM memory shortages, 650% spike in memory prices, 5-time increase in NVMe shortage costs, a broader global NAND shortage. In other words, basically, India isn't struggling to allocate the GPUs. That's not the problem. It's navigating the same supply chain choke points hitting hyperscalers worldwide. And what truly sets India apart is the cost. Under the India AI mission, GPUs are being very heavily subsidized, pulling GPU hour pricing below $1, yes, the cheapest AI compute anywhere in the world. Earlier rounds discovered high-end GPU pricing around 115 rupees per GPU hour, already far below global rates, of course. With government underwriting close to 40% of infrastructure costs, effective prices will fall even further. So let's just forget subsidies or government experiments. That's actually old school. This emphasizes that India is treating public compute as national infrastructure. Just like we built highways and UPI, we are now laying down the silicon tracks for the next decade of intelligence. And now, of course, for the truth, which leaves us, well, slightly unnerved. Even as India talks about sovereign GPUs, edge systems, and domestic accelerators, almost everything that matters today still runs on NVIDIA. H100s, H200s, B200s, and now potentially B300s. Tonight's development reinforces a reality. NVIDIA is not just back. No, NVIDIA is central to India's AI mission, not ideologically, but very, very practically. That explains why Jensen Huang, founder and CEO of NVIDIA, is most likely to attend the India AI Impact Summit among other AI leaders. And this is why Union IT Minister Ashwini Vaishnav has been pushing the next narrative. India must build its own GPUs. Vaishnav has said India will develop indigenous GPUs in 3 to 4 years. And here's where it actually gets even more interesting. While we are securing the chips, CDAC is playing the long game on the actual silicon, aiming for next-gen nodes that move India from user to maker. The Union Budget 2026 just turned this into a full-scale manufacturing war. With India Semiconductor Mission 2.0 and the 40,000 crore rupees outlay for electronics components manufacturing scheme, which is also the ECMS, the strategy is a clear 3-tier stack. Buy GPUs now, which is India AI Mission, build the supply chain, Semicon Mission 2.0 plus ECMS push, and build the silicon. Made in India GPU ambition. And of course, the Made in India dream just got a reality check from a Bengaluru startup called Agrani Labs. They've emerged from stealth with an $8 million seed led by Peak 15 to build AI GPUs for data centers. Founded by veterans from Intel and AMD, this is no longer something that comes across as a distant dream. The founders are officially entering the arena, my friends. This shift happens just days after Nirmala Sitharaman announced a 1,000 crore allocation to the India AI mission. We are, of course, moving from policy to infrastructure with a plan that checks all the boxes: AI across agriculture, manufacturing, services, and education, multilingual AI tools, and a tax holiday for foreign cloud providers until 2047. They're even actually prepping the workforce with 15,000 AI labs in schools and 10,000 technology fellowships. But you know what? Unfortunately, even at 65,000 GPUs, we are lagging behind the brute force of the United States or Chinese hyperscalers. Some single US companies already operate clusters larger than India's entire public stack. So, India's different playbook has to be this: cost discipline, not capital burn; broad access, not closed labs; and domestic model building, not perpetual dependence. You know what this does? It unlocks for us, which is something which is very simple: cheaper training runs, larger fine-tunes, and equal access, whether you're a tier 2 university or a Bengaluru startup. And of course, here, as always, is the front page take. A year ago, we admitted we have the talent, we have the data, but we don't have enough compute. This move toward 25,000 more GPUs doesn't magically win the race, no. But it turns compute into public infrastructure. It buys us time for Indian accelerators and fabs to catch up. I guess being late might actually allow us to leapfrog by avoiding the capital-heavy mistakes others have already made. Please do let us know what you think. Is 65,000 GPUs enough to spark an Indian AI spring? This, ladies and gentlemen, is Front Page by AIM Network. Like, share, subscribe, and always remember, think AI, think India AI Mission, think AIM. And of course, for right now, we'll take a short little break.
$1,700 GCCs. Yes, that's the present footprint in India of the global population of GCCs. $1.9 million people are gainfully employed in these global capability centers. $64.6 billion was generated in the fiscal year 2024. But the big target, that's 2030. 2,200 GCCs is what India wants to notch up to, employing more than 2.8 million people.
I wrote in my book that failures were in bold font for me and success was like default.
If you really want to control the narrative of life, you can do no wrong.
The people who focus on success and, sort of brush away failure, like a Virat Kohli is a great example.
Is doing a great job in bringing the GCC ecosystem together.
So you're adding a lot of value to the GCC ecosystem.
Oh, I had to take a beat and sit down to make sense of this amazing roller coaster ride that we've had at MachineCon 2025. We will catch you again at the next MachineCon.
$1,700 GCCs. Yes, that's the present footprint in India of the global population of GCCs. $1.9 million people are gainfully employed in these global capability centers. $64.6 billion was generated in the fiscal year 2024. But the big target, that's 2030. 2,200 GCCs is what India wants to notch up to, employing more than 2.8 million people.
I wrote in my book that failures were in bold font for me and success was like
front page. You know what? We're witnessing the first real casualty of the AI boom. And if you thought it was a tech company, I'm so sorry, but you're wrong. It's actually the hardware in your pocket. Look, basically everyone's talking about record earnings and nobody is really talking about the memory squeeze happening under the hood. There's a brutal trade-off in play right now. Think of the world's semiconductor capacity like a very high-end luxury development. It's finite. Right now, giants like AMD are outbidding everyone for HBM, which is of course high bandwidth memory. It's the digital gold needed for AI data centers. But here's the problem. HBM is incredibly resource heavy. So for every 1 unit of that AI memory produced, manufacturers have to sacrifice 3 units of the standard RAM used in our smartphones and laptops. We aren't just seeing a shortage. The cloud is literally cannibalizing the edge. And this is creating a massive friction point. AMD is the predator. They've secured the supply to fuel their massive server growth. But Qualcomm, on the other hand, they are facing a wall. They've built the chips for on-device AI. Yes, that's their strategy. But the memory required to run them has seen a 90% price spike in just 6 months. Phone makers are now in a corner. Do they ship a flagship phone with less memory than last year, or do they pass that massive cost straight to us? The bill of materials has exploded, and it's threatening to stall the mobile AI revolution before it even starts, by the way. So is the rush to power the cloud effectively bankrupting the potential of our personal devices? To get into the mechanics of this and a lot more, I am joined by our editorial head, Prabhu Arjunan. Prabhu, of course, is always somebody who brings such fascinating insights, and I'm pretty sure that he's right warmed up and excited to tell us what is really going on. Prabhu, let's start with the fact that welcome to the front page. It's a true honor to always have you with us.
Thank you, Sudhir.
Let's actually start with this one, the December quarter results. What has happened?
Yeah, I think the trend has been set in the last quarter. When we had NVIDIA results, the market kind of reacted in the same way as what we are seeing today. See, we are moving away from that AI hype cycle towards the kind of application reality, right? So AI hype cycle kind of showed us what the demand is. Now when we are moving towards the execution layer, we are seeing that supply constraint. So that is what is happening. AMD, look at AMD, yesterday's result, they hit 10.3 billion in revenue, which is 34% high year on year. And their, stock movement was down 17%. Now why? Why, if you have reported a good quarter, why does the stock fall? Sure. So that's where I think markets are expecting much. Today, analysts or the investors are not expecting what AMD or Qualcomm has done. They are seeing what Qualcomm can become or AMD can become. So that they are looking at the future perspective, and that's where the markets are like, hey, look, you might have done great, but I'm not happy with what you're projecting. So, in fact, if you look at...
Talk about being a monitor in the class or the principal.
Yeah, so investors are guiding it because with so much of AI talk, right? I mean, by end of the day, you need to fetch that revenue. And the ecosystem spoke so much about the AI infrastructure. And if it is not yielding revenue in quick time, then investors lose that confidence. When will I get that money back? So that is where it is driving towards. So
and rightly so, do you not think so, Prabhu? I mean, those concerns that they have, as far as the market is concerned, as far as the investors are concerned, is absolutely correct.
It is. But if you look at the outlook for AMD, for the next quarter, AMD's was Q4 result that they put out. So the Q1 of 2026, they have projected 9.8 billion in revenue.
Right.
We have had 10.3 this quarter, which means that they are being cautious of it. When the AI demand is raining, why are you being cautious? It should have ideally been higher.
Absolutely.
And out of the 10.3 that revenue that they generated in the last quarter, 390 million came from China ecosystem. Now, if you remove that, then your revenue is kind of okay, it's not that great, right? Now, why we should not consider the China aspect, or why analysts are not considering is because of these geopolitical tensions that exist. Sure. So it is not always in the next quarter, will Trump's policies kind of have a detrimental effect? It also changes, so, which is precisely the point. So when there is no clarity on that, so they don't take, the market doesn't receive the China revenue as a great potential. Right. So that's where we are heading towards.
Even with your wonderful knowledge and even a crystal ball, I'm promising you, you won't be able to predict Trump. Anyway, the market divergence. AMD stock, as you just said, it's taken a bit of a hit despite securing the supply. So the entire market ecosystem, is it that is it feeling that this market squeeze is because of unsustainability? Do you feel that could be another aspect which is kind of somewhere driving this hit which has taken place?
Well, we are seeing the shortage of memory, like the memory squeeze, right? I mean, if you look at the PC market or the smartphone markets, we all need the dynamic RAM. And the data centers for the AI infrastructure, they are all demanding the HBM, high bandwidth memory. Now, who's producing all this? By end of the day, it's the same set of companies that is catering to this segment. And where does the infrastructure come from? Whether it is AMD or Qualcomm, they are all relying on the same ecosystem. Now, why there is a crisis? Because they are not able to cater to the demand. Why? Because when you shift from your DRAM to the HBM, you're using the same set of capacity, which requires higher infrastructure, which means that your production is getting slowed. So ideally your DRAMs are getting choked, so, and people are not able to cater to the demand.
Yeah,
So
which is what I actually wanted to talk to you about also, which is the DRAM prices which have been projected to rise 90% as I just mentioned.
Right.
Prabhu. So that is obviously going to have a, do you feel that that is going to lead up to some sort of a spec recession, as I was just trying to give in terms of the context before I brought you onto the show? As far as the smartphones are concerned, do you think we'll be seeing like lesser efficient models as compared to 2025?
let's take, today we are talking about high-end phones having AI capabilities, right? Now, if I were to have a on-device AI capability, or if I were to have high-end models on my system, I need to have better DRAMs.
Sure.
Now, to have that, I need to have the DRAM supply, sorted.
Yeah.
Now, why AMD or Qualcomm, they are not able to cater to this market is because there is high demand from the data centers for the HBMs.
True.
So the resources are diverted towards that, which is why we are seeing that, look, the demand is spiking, supply is not there, the prices are inflating. As simple as that.
Right now, NVIDIA is not their best friend.
See, everybody has diversified. In fact, if you look at the HBM capacity, from Samsung to Hynix to Micron, everybody is getting into that segment because that is where the real money is.
Money is correct.
By doing so, what happens is that the smartphone market gets choked. But smartphones are also kind of, from the AI infrastructure, everybody wants to sell AI phones today. So now what happens to that? So by the end of the day, market is like, hey, look, if I don't sell the AI phones by 2026, then I'm losing out because I've spoken so much in the last 2 years about AI can do so much.
Correct.
So when will the AI phones come out? If my chips are getting delayed, my phones are not going to get produced.
True.
If phones are not going to get produced, then your investors will lose confidence. So
it's one crazy vicious cycle that one is getting into. It's a crazy loop.
Right.
So tell me this, Prabhu, what do you feel about, I mean, as we were discussing, the one thing that popped up in my mind was AMD, I mean, the entire strategy is on-device AI, and it is struggling today. So what do you think, or what do you feel AMD should do in this sort of a crisis? What do you feel that they need to kind of find a way to kind of pivot or figure out something or whatever? Because, well, let's be honest, and NVIDIA is a huge monster to deal with, or for that matter, the other ones.
See, of course, NVIDIA is a big threat when we compare to other players, but we've also seen that it's not a problem of AMD alone. See, the market, it's like the AI bubble talk that we are talking about, right? Why is there a bubble talk that's happening? Because it is not.
Sorry, I said AMD, I meant Qualcomm.
Yeah.
On-device strategy AI. Right.
So I'll come to that. But why are we seeing this bubble talk, and why is that reflecting on the semiconductor ecosystem as well, right? Now, AMD is just a kind of a visible target, that's all. So everybody else in the AI ecosystem, whether it is a chip company or it is a AI company from Google to Microsoft, everybody is facing the same crisis. There is enough expectations, the supply is not there, you are not able to cater to the demand, I can't make revenue as quick as what the investors think. So that is where.
One thing that pops up in one's mind immediately, Prabhu, as a very simple, basic thought, commonsensically for that matter, increase the supply. Let's increase the production lines, or for that matter, increase the capacities.
Well, to answer that, I get it. See, but today, the factory facilities are the same, right? So data centers are overbidding the smartphone manufacturers. That's how it is. So why to answer your question of why can't I put more? The capex is already of these companies are already raised with AI infrastructure. How much more do I put in?
That's true.
Right? So I mean, where do I increase these facilities? If you have to acquire from land acquisition to kind of building the facility, it takes time.
Yes.
But
time is one factor, and also, do you feel, Prabhu, that this sort of an investment in terms of capacity expansion, do you feel that the ends will justify the means in terms of, let's say, we talk about the sheer numbers as you just mentioned? Would you be kind enough to maybe just share with the viewers so that at least they get the context?
Let's talk from a user point of view, right?
Yeah.
Now, let's say if I were to have an AI smartphone, and if my price raises by, let's say, 15% by next year, across globally, we are seeing kind of markets how reacting, inflation, how it is raising and stuff. Will the smartphone manufacturers have the same sales as what they had in 2026? We will have to wait and watch. Now, for that to happen, unless your smartphone sales are higher, I'm not going to have a better revenue, right?
Absolutely.
So if you don't have better revenue, what happens to all the chips that they sold? So again you're caught in that loop.
It's a weird loop.
So and if you put infrastructure, money on setting up factories and building the whole ecosystem, and if you don't get revenue, then you are hit because you're already late. And where does that lead you to? Then investors lose confidence, the stocks will tank further. So that is where kind of it will lead you to again the AI bubble kind of impacting even the chip market ecosystem. So,
have you read this book called Catch 22, Prabhu?
I don't remember. No.
I just thought it might. That's where we are at.
Yeah. So yeah, the catch 22 situation. So, but ideally, I mean, you look at it. Why would companies like AMD or even NVIDIA for that matter, right? Why should they worry? Should there be a sign of worry when they are doing good in terms of demand is there? I think when Samsung, Hynix, they all said we have demand for the next 18 months.
Yes.
And if you have demand for the next 18 months, you keep producing, and then who's the buyer?
That's what I wanted to finally ask you, which is that what does it do to the consumer electronics market? Since there is obviously a demand for the next 18 months, what does it do to, for example, consumers and the consumer electronics market?
Certainly, there will be a shortage of demand for the PC market and the smartphone market because as the capacities are shifting towards producing the HBM from the DRAMs, it's the same set of factories that is doing. So, which means that I won't get the memory chip for my smartphone and PCs. So, all my AI devices are going to get delayed.
Right.
So, which means that Qualcomm will take a hit, and probably including AMD's on the smartphone market.
Delay is fine. That I agree. I understand that logically. But I don't think, I personally feel, Prabhu, they are not going to compromise on the quality in terms of, let's say, the specs, etc. They'll be okay to take a hit as far as the delay is concerned, but I don't think they will go hark back to, let's say, a lesser model, because that just definitely destroys their so-called...
Technology is changing fast.
Exactly my point.
So if you don't do it today, by the time you delay it, there will be some other technology that will come in, perhaps, and there will be another player who will come and say, hey, look, I can deliver this better. So, I mean, they will have to act fast. And how will you act fast? Why will you act fast? Is companies that they will have to define further in terms of setting up more factories. And if you're doing more factories, can you produce quickly and deliver it to the market is a bigger question. So,
finally, Prabhu, I mean, it is genuinely a weird figure of 8 that everyone seems to be stuck in. What is your final, let's say, the front page take or a solution, if you will? Which you'd like to share with all of us and the viewers. What do you think can just break this entire thing?
I think companies need to realize that the demand and supply needs to be kind of addressed, where we have seen so much hype. We have talked so much about the AI cycle. Now, was it really meant to be that hype?
Yeah.
And two, if I were to address the AI smartphone ecosystem or the PC ecosystem, right? Where is the user base? Are the users across the globe ready to use this AI ecosystem? Right? Now, catering to that, AI has wonderful capabilities. Your system can do much better than what a human can do. Your smartphone can get much more smarter. All of this is fine. But is the consumer ready? So, who are you building these for? It's just that they will have to foresee what the consumer wants. Will the consumer be able to afford these and then produce accordingly?
But do you think not something like that would have been studied before, leaping into it beforehand?
Well, they would have studied, but nobody would have expected this slowdown, right? I mean, it's see, everybody, I mean, like I said, today it's because it's doing so much, we have moved away from DRAMs to kind of HBMs. So the companies are thinking that, hey, look, there is much more potential with newer technologies. I am producing more, but who are you doing it for?
Correct.
So that's where we are headed towards. It's kind of a reality check towards the market dynamics in terms of what the market wants, what the consumer want, rather than what I can produce. And while the investors are thinking that, hey, look, you can produce great, but are you fetching me better revenue soon? So,
which is always the bottom line when it comes down to the investor, to be honest,
right.
Prabhu. As always, thank you so much for being on Front Page, Prabhu, and wonderful insights, ladies and gentlemen, as you just heard from Prabhu. And I guess he summed it up beautifully where he's talking about the fact that yes, first and foremost, we need to understand if there is a genuine real demand and not just keep leapfrogging and keep hurtling towards the fact that no, this is expected and we need to keep delivering, because clearly there are choke points and the chinks in the armor are starting to show. But I guess what we need to do right now is to probably reassess where we stand and then start taking steps forward, because finally, when the investors are asking those very tough questions, they will definitely need to be answered. That, ladies and gentlemen, is Front Page. And as always, like, share, subscribe, and always remember, think AI, think AIM.